evening, everyone. Today is the 9th of January, and we just completed last week, the first week of 2023. So the market is back. The volatility is back into the markets after 2 weeks of slow volatility, basically since the middle of December, since after we had all that week full of Fed meetings and central bankers meetings from Fed, ECB, Bank of England. Yes, the market was a little bit ranging, and now last week we finally saw some volatility and some big news occurring in the market. For example, the major one was NFP that we had last Friday. We had a few news related to the unemployment throughout the week, and for example, we have the job openings, we had the EDP non-farm employment change, and we also had the NFP in the end. And based on what you had from the job openings and the EDP non-farm employment, we had kind of strong positive news in there, right? 10 million.46 comparing with the expected of just 10 million. Even the previous month, it was revised to the upside. Then EDP non-farm employment change, it was 235K, which was much higher, basically almost 80K new employment, higher than what was expected. Even previous month was revised to the upside. Also, the unemployment claims, it was Thursday as well, it was lower than expected. So our indication, based on the news that we're receiving throughout the week, it was that most likely we are going to have a better than expected NFP number, which is exactly what occurred. So we had a number of 223K when was expected only 200K, and we saw actually how the market reacted to it. To be honest, actually the way the market was reacting to the previous news on Wednesday and Thursday, we saw the dollar getting stronger, and we saw kind of the major indices and we saw kind of the major FX pairs kind of going to the downside. The indices as well kind of going a little bit down when this news came out. However, it was the complete opposite when the NFP number came out. Actually, when that news came out, we saw the dollar moving to the downside. We saw the indices kind of jumping through and moving higher, and then it kind of stayed within a range. To be honest, the biggest news or the biggest movement on Friday's session that it led to the strong move to the upside on the indices, it occurred after 3 p.m., which is when we had this ACM services PMI coming out, and it was much worse than it was expected. The market was expecting at 55. The previous month it was at 56, and the market came out lower than 50. Lower than 50 means contraction, and it's the first time since June 2020 that we had a negative or a number lower than 50. And when kind of, again, with the topic of good news are bad news and bad news are good news, this was kind of the market celebrating bad news, hoping that the Fed is going to maybe reduce the interest rate hikes for the next meeting in February. Looking at that, we can see that the market at this point in the next meeting on the 1st of February, in 1 month from now, is literally kind of predicting just a 25 basis points hike. That's where 75% of the market kind of is at this point. And it has been like that since basically the beginning of the week. It's actually, it's basically since then. So that's what the market is expecting, right? And then, of course, hopefully, or even looking, for example, for the end of the year, the biggest prediction is to, like, there's a really low chance of being above 5%, when in theory, based on what the Fed has showed in the predictions, on the dot plot predictions, even some other Fed members have been talking or mentioning, is that by the end of 2023, it was actually kind of a little bit above 5%. It was maybe 5.1, 5.2% where the interest rate would be, but the market is not pricing in that like that. It's not looking at it's not in alignment with what the Fed is doing or is saying, and is actually looking for the market to be at around basically this 4.5 to 4.75 by the year end. And maybe, for example, if we take a look even on November, so yeah, the highest expectation is literally this one. And maybe, actually they're expecting maybe to go to close to 5 and maybe already to start easing and to have a soft landing on the Fed. Let's see if that's going to happen. Let's see until when actually the market's going to celebrate or to be so happy with and seeing the market going to the upside when you have such a bad news, because I think that's going to be changing in the next months, maybe until the end of the first quarter. Something else as well, and if you take a look into more detail of what happened during NFP, we can see that basically based on the sectors that saw the biggest growth, it was in education and health that gained 78K new jobs, leisure and hospitality 67K, and trade and transport gained 27K. Meanwhile, construction saw employment rise 28K and manufacturing up 8K. One of the fields that saw a decline was, one second, where was it? It was in the temporary help jobs, right? So basically those jobs that kind of are just a quick, maybe, how do you name it? Temporary workers. That's where we saw the biggest decline, and which can be a big and important factor to pay attention to, because just give me a second, guys. Because usually this is an important sign, because these workers are the first one to be fired in a downturn, right? As they are the easiest actually to be fired, and they are likely to indicate the broadening weakness in incoming months, right? So we can see that this is something that is occurring. On the other hand, as well, we saw that at this point it has been more on the tech side that we have seen the job cuts, but this is something that may start occurring as well in another sectors in the market. Even if you take a look into this image in here, 1 second. That you can see in here, this is basically the unemployment rate at this point. It's around 3 point something, and then this is actually the confidence, the CEO's confidence advance in the fourth quarter, right? And you can see that is at his lowest, almost all the way back to 2000s and to 2008, 9, around there, right? So we can see that at this point the unemployment is kind of lagging based on the confidence of the CEOs, and this can be a good information as well of what we can maybe expect in the future, and maybe more job cuts may occur in the next few months. So this is what you can see. So it's not everything as pretty as maybe it looks like in the job market. There are a few things to consider and to pay attention to when looking at this data. And then, of course, how the rest of the indicators that you are receiving, the contraction that is going on in the economy, which can lead to a potential again, weakness in the economy and eventually recession. So let's see until when the market is going to be celebrating bad news as it has been during last year. Something else to pay attention to, of course, this week is going to be the CPI data that's coming out next Thursday. It's, of course, another point to look at because we have been having a good CPI data in these last 2 months. A reduction, there you go, next Thursday is expecting to be at 6.5, 7.1 at this point. And we have seen, right, since July that we have been having a reduction. So in July it was a higher high. It reached 9.1, and at this point 7.1 with expectation to be at 6.5 on Thursday. CPI has been, as everyone knows, the biggest catalyst of last year, and I think we are moving away from that. I'm actually going to be curious to see how price is going to move next Thursday, if it's going to continue to be such a strong move, or if it's going to be a little bit lower. I think already back in December, on the 13th, or I think it was 13th of December, when you had the last CPI, the market didn't move as it has been doing during the previous CPI releases. It was actually a strong move, but it paused straight away. It was not as a continuation, right? It was a little bit of a different behavior during those news. And one of the reasons I believe is because everyone is aware now that what the Fed is doing. No one is really concerned that the Fed is going to hike the interest rates as much as it was before. So that phase of the market is gone. It's more about now to see for how long actually the Fed is going to continue with this interest rate. But we have seen some data showing that inflation is going down, or it has been a little bit decreasing. It can be sticky. It doesn't really mean that it's going to just go into this trajectory and reach to the 2% that is the target from the Fed that fast. It may stay around maybe 6 to 5% for a while. So it's something as well to pay attention to. It may not go into this decline as fast as it kind of move to the upside. It may stay within the range in there. But yes, something that I was looking for, and I was actually surprised, not surprised, but something that I believe is going to change from last year to this year is that CPI is going to have less importance on the investors in the market, and they're going to have, for example, NFP as one of the main indicators to look at throughout this maybe next few months until maybe the second quarter, maybe even third quarter, because we are expecting, and the Fed also mentioned, it's expecting the unemployment to go close to 4.3 or something like that, which is going to start to be shown an increase. Another data that maybe can help with that eventually is going to be the unemployment claims that comes out every Thursday. Maybe when you finally start noticing a higher number in here, this is going to be shown that the non-farm payroll is going to start to increase. At this point, it's 3.5, is basically a 1%. And let's see if it's not going to be worse than that, because maybe the Fed may be predicting it to the downside and not really realistically how bad the unemployment can go. So yes, next week, it's definitely the CPI data that you're going to be paying attention to. There's going to be the Fed Chair Powell is going to have a speech tomorrow at 2 p.m. in a conference in Stockholm. So let's see what he's going to say. It's going to be the first time he's going to speak this year. So yeah, basically that's the biggest news for the week ahead. Something also that is going to be important to notice for the indices is that the earnings are going to resume. Right? It starts next Friday, and companies are going to start announcing the Q4 results. Next Friday, it starts with the biggest financial institutions, big banks, Bank of America, JP Morgan, Chase, Citigroup, and so on. They are going to, Wells Fargo as well, they're going to be announcing their data next Friday. So Q4 earnings are back. It's going to be interesting to see how these big financial institutions are going, what kind of results they are going to report, because this can be seen as well as how strong the financial sector is, and with the interest rates increasing, this can actually mean a good business for these financial institutions, right? Because of the difference between the rate that they charge, the interest rates that they charge. It's going to be better for them with these high interest rates. So it's going to be interesting to see. And then the next few weeks, it's going to be another big factor to pay attention to, how well the rest of the companies and the rest of the sectors are in the US economy. And the indices for sure are going to show some reflection of that. Another point to look at that occurred, it was in the Eurozone. So Eurozone is showing a decline in the inflation. It was actually a really strong decline from basically it was at, where was it? It was at 10.1. It's back to single digits at 9.2. We saw as well the inflation decreasing in Germany and France. And the big factor, it was the energy, right? So there was a big decrease in the energy sector in there, which kind of helped the inflation to decrease in the Eurozone. However, something that to pay attention to is actually the core CPI. It was actually higher than the previous month, right? So if we exclude actually the energy and food, basically there's still a high inflation going on. So benefiting as well from the winter is not as bad as maybe as it could have been, therefore managing to decrease the energy expenses in there. Therefore, we have seen this CPI going down. But yes, paying attention to this one, right? The Christine Lagarde, for example, for sure is going to continue with the same posture that she said. Another 50 basis points increase, most likely in the next ECB meeting. Yeah, that's basically it in terms of news. If you start taking a look at the charts and what you can see in here from the dollar index, let's actually start with indices first. So yes, this is the move that we saw happening last Friday with the CPI and then with the negative services manufacturing. With the services PMI. Yes, finally, S&P was in this range. We talked about these levels for quite a while. Actually mentioning last Friday during our morning call, this key zone in here where eventually S&P actually went and reacted from. And we see there's a chance for the indices to continue to move a little bit higher. We just broke kind of this level in there. Actually, we haven't really broken that one. Yes, I think there's a chance to see a little bit the indices going higher before maybe any move down. CPI is going to be interesting to see what kind of data is going to come out and how the indices are going to react to it. And then of course Friday with the earnings on the financial sectors and the big banks as well. I could see price going upwards. We have now these strong levels of previous resistance that maybe can hold price. Maybe looking at this level can be interesting to pay attention to. Price reacted quite nicely from this level, and that can push a price a little bit higher. So yeah, maybe filling this price at least until 3,900 or even getting close to 4K could be something to pay attention to for this week, for these next few days. So yes, finding some levels in there that can work as well as support. Now I'm looking at specifically this level somewhere in here to see if price holds it or not, something in there, or even something in here. In terms of the S&P. On the Nasdaq actually comparing with the indices, it was the one that I had strongest bias to the upside. It was something that we have been talking about this level in here. It was left behind during the CPI price, never really got there. So it left this one behind. And after that, actually, it even created this double low, which is quite nice to see just before the final fake out. And this one was a key level that I was looking for, which was the break of this high that we had during last week. Price had broken this above top that we had created with this high and then the other high, and we had created that move to the upside. There was, again, there is no reason at all for price to break these highs if the intention was to continue to move down. If they do break this high like this is quite a good indication of a good clue that price most likely wants to move higher. And then it just went all the way down, retested these lows, and there you go. Move during the last Friday. I combine NFP with the services PMI, and a strong move in here on the Nasdaq. And again, looking at this key level in here can work as a level to hold price to the upside and continue to push it in there. So keeping an eye on this one, maybe as a trend continuation setup. Next levels, of course, somewhere in here or the continuation to go a little bit higher. But yes, next target or next level that I'll be looking for in terms of resistance for sure is going to be this high at around 11,260 in there. Nasdaq was the one with the deepest retracement, was the one closest to the lower low comparing with the other indices. S&P a little bit in the middle, and then Dow Jones was the one closer to the highs. And there you go, similar move comparing with the S&P, a little bit in this range, creating this level with a little bit of higher high or lower highs in here, and then it finally broke through. Let's see. Key level to look for, maybe something in there. I can even target this high altogether and something in here. I think there's a little bit of a zone in there that price could go to, or eventually I would like to even target literally this high and price could go above the high, and then let's see if we go down in there, or if we continue to go to the upside. Personally, in terms of a bearish bias on the indices, Dow Jones is actually the one that is a little bit give me that idea. I'm okay with seeing S&P going high, Nasdaq going higher, but Dow Jones, I actually would like to see price kind of filling a little bit all this range. I'm not a big fan where price kind of pausing here, so I would like to see price going there. Now, price could literally get closer before maybe reversing, and as I mentioned so many times, pay attention to also where the high is reacting to on the left side. If it's not reacting from a good level, there's a chance that you can maybe go a little bit higher before maybe turning to the downside. We'll see what may occur in here. But yes, a few levels, maybe a little bit higher. We do have now this level in here as well to pay attention to in terms of if you're looking for a trend continuation setup in alignment with these highs. Previous level of resistance can work as support, and we have also kind of maybe a little bit of this demand. So yeah, go higher a little bit, start creating a little bit of this structure. You can come here with respect and continue to go higher. Let's see if price is not yet reacting from this level before it does this movement. But yes, in here can be a good level to look for a trend continuation setup at around 33,470, something like that, on the retest of this size. Especially if you start creating, and we have already created this up below, so it's good. Price can go a little bit higher, can go down, react from there, and go higher. And of course, we have this high as well here, so pay attention to that as well. And this is for the US indices. So maybe a little bit more of a move to the upside before maybe starting to see a little bit of a move to the downside, and then we'll see what's going to happen. Dollar, right? So dollar has been going down. It had a little bit of a retrace to the upside last week, and basically resumed to the downside now, right? So it's retesting the lows of the created last year. We have been talking about this level for quite a while, checking this below. Price took the lows just for a bit. I mentioned as well, if it was just for a bit, that most likely can be seen as an engulf to downside. If price had actually, if this was, for example, had moved a little bit lower, maybe getting a little bit closer to some kind of level of structure in here before the reversal, maybe that could be seen already as a move. Expecting for price to go a little bit higher. At this point, I think we are going to create new lows on the dollar index before maybe looking for a move to the upside. Maybe something in here could be an option. there is even the possibility of targeting all the way these lows of price, maybe going all the way until here and just reversing after we reach this this low. We'll see this low is at around 101.253, but there are a few levels in here that price can still react and bounce from, especially this high, for example. This can be a good level for price to react and maybe continue to move higher, just below all these lows that has been created in here. And at this point, I think on the euro we are looking for new highs as well, most likely. Especially today, I'm definitely expecting new lows on dollar index. This was a move that we talked about last week, exactly for the NFP. I talked about this level in here. It was a level that was still fresh. We have basically, or we are creating a little bit this compression move to the downside, but there was this still demand that was fresh in there. This highs never reacted from there, so that was a good level to look for price to go to. And yes, this is something that could be predicted based on how the approach that we are having. When we have price approaching an important and fresh level in a higher time frame, just before some big news events, could be NFP, could be CPI, could be something else, could be the Fed as well, FOMC, there's a high chance that price actually is going to react from there and at least have some kind of reaction from that level, especially if we have good compression as well on the approach towards that level. Then we are free to just have a strong move in the opposite side, exactly at around the news events. And since this was dollar index, you could have looked at the other major FX pairs and you could have seen exactly that, but on the opposite side, right? Maybe some zones to actually look for a long on euro dollar, on the Aussie dollar, on the pound, maybe some zones to look for a shorts on the dollar CAD, on the dollar yen, on the dollar franc Swiss. And you could see that there were, most of them, they were also reacting from really good levels on the higher time frame. And this is how you can start creating your bias and prediction when trading these big news events. Euro index, it's another one that you pay attention to. Something that price is kind of reacting from that level. We talked about that already. Price actually took this low. I wouldn't be surprised if you do see a little bit more room to the downside on the euro. Again, we have been seeing some ranges in here, and this is just to show that euro hasn't been kind of the most important pair of the week. We have seen maybe euro dollar going first down, then up, but on the opposite side, we have seen euro yen kind of doing a little bit of different moves, euro Aussie, euro pound, and so on, doing something different. That's why kind of we started to create some ranges in here. Eventually, there's going to be some catalyst or waiting for the next ECB press conference to start seeing a complete move in alignment with all the euro pairs. That's maybe when you're going to see some movement or stronger movement around this euro index as well. But this level can still be interesting to maybe attempt to look for new shorts, or even somewhere in here could also happen. Even the case that we actually break above this high, as I mentioned a few times, there's a potential to go a little bit higher and reach all this level all the way to 1032. Maybe first fake out this one, go down, whatever, but eventually maybe target that level if we do break above this level. Otherwise, maybe price can just respect that level and start moving to downside. And then yen index. Yen index was another one. Moved quite nicely actually during these last 2 weeks of the year. It was one of the assets that moved, that had more volatility and biggest moves occurring in there. Yes, this range, again, last Friday, it was not about the yen, it was usually about the dollar and so on. So we saw a little bit of a move, but not too much. Yes, targeting, I'm looking for price to go a little bit lower in here on the yen index, with the potential even to maybe break this low and maybe retest somewhere in here. We respected this high at this point. I would like if price were to go kind of higher, I would have liked to see this high to be taken. Didn't really occur. There's maybe retracement to happen. I'm still targeting this low in here. We haven't reached that level. We just broke this level top last week as well during this move. Price is reacting somewhere from here. Maybe this is a good level of structure. I would like to see maybe price eventually continue to go go a little bit higher, but we could see some retracement first occurring on the end, maybe somewhere in there, or even maybe something in here could be a good option, with the chance that maybe you can even break this low, can come here and can even look for new shorts in there. There's maybe something still in here that you can use it to look for a short. Again, what you see in here on the dollar index, on the yen index, it's kind of the opposite. Like if you see this one going down, most likely dollar yen is going up. And if you see this one going up, most likely the yen pairs are going down. So it's the opposite from what we have. And this is for the major indices. We're gonna now take a look at the major FX pairs and maybe how price reacted around these levels. And then we finish a little bit with the commodities. So euro, as we talked about, a strong move to the upside when you saw that the dollar index actually made a strong move to the downside, is retesting the highs from basically the beginning of the year. It reacted from that level. It was a level that we also talked about in here. It didn't even react from the level itself. It just took the lows and it reversed straight away during the NFP. So yes, these moves in here that occur on the 2nd of December, it was a weird day to trade. As you can imagine, the spread, it was bank holidays all over the world. So I'm not even sure who was involved in this, who filled their orders in here. And I was expecting actually price to retrace to this level at least once, if the idea of the euro is to kind of continue to move down. And personally, I could still see eventually euro to maybe fill out this range, or even at least pause somewhere in here. So yeah, maybe I still have that bias on the euro dollar, but at this point I do have a little bit of a zone in there, but I would like to see actually euro going higher and even take this high. There's a level on the left side above this high that can be quite interesting, just a little bit above it. That price can still fake out the high and then maybe reverse. Let's see if that occurs or not. Yes, I'm looking for price to go a little bit higher today, still on the euro, and to get a little bit closer. Euro, yes, we had good news with the CPI and so on, inflation going down on the eurozone. But let's see, there's still some issues as well going on in the euro area. So yes, we have been going upwards since the end of September, that we had this reversal in here. So yeah, it may be time to see a little bit of a deeper retracement on the euro, but you can time it as well a little bit with maybe when we have that reversal on the dollar as well. So you can take a look at both of them. So yeah, this level in here, price reacted from there. That's where it opened today. Yeah, it's going to be interesting to see what else on the euro is going to occur. And pound was going as well, similar move, similar reaction as well from a good level. All the compression on Friday, it was clearly anticipating a move to the upside, reacting from here. This is a daily zone, a daily level in there, quite nice. It was fresh in here, price reacted from there. I'm expecting still the dollar and the pound to continue to go a little bit higher. Personally, maybe to actually target out this high and going literally a little bit higher. We took this low, which was also a double low. It was something that I also mentioned last week when we saw this double low. Why not taking the double low and then reverse, which is what occurred in here. For now, maybe if you're looking for longs, maybe testing of this level could be an option to maybe look for a long in there. There's still this level in here that was fresh and left behind. Price can maybe go there as well and go maybe check on the war time frame if that level is actually still fresh or not. But yes, maybe targeting all the way until this high and going a little bit higher could be an option. Maybe something in there, or even retesting this level. Eventually, the price gets closer in here. I would like to see price taking this high and maybe reacting from somewhere 1, 2, 3, 9, 1, 2, 3, 7, 6, 9 on the pound, with the potential still that we have this size, and this is a level that I've been looking for quite a while. There's even the potential to even fake out this size altogether and getting to this level. This level we talked about a few weeks ago. Price decided to just pause in there and reverse. It will be, the level is 124,781 or something close to that level. If we do create new highs on the pound before maybe going lower. So, but this was for the pound. Not many news related to the pound. Yes, there is that situation in the UK with the NHS and whatnot. But yeah, Aussie has been one of the biggest moves of the year. Some good news related to the China and that have seen price going. Yeah, an anticipation of a rise in the commodities exports to China, which has been seen the Aussie going and making a strong move to the upside, going all the way back to high since September, basically. Yeah, again, I'm still kind of a little bit more bullish on the Aussie. We had this double top in there. Again, really good reaction, where if you paid attention where it reacted to during the NFP, this demand level in there, good move, good reaction, good approach, and good PA in there to look for an entry. Yes, good to be reacting from that level. I could see going maybe a little bit higher, but it's a good level to where it reacted to, but it could go a little bit higher. Again, key level to look for this previous level of resistance. Let's see how price is going to behave somewhere in here if it gets there, maybe as a continuation to the upside or not. Now this looks a little bit compressed. So yeah, paying attention how price is going to behave somewhere in here. Maybe there's an opportunity to look for a reversal in there. Reversal, I mean a continuation to the upside on the Aussie. Yeah, that's basically it. The yen, right? So the yen, what have we seen in here, right? The end, we have this strong move to the downside since the intervention back in the 21st of October. Then I had a second intervention. We have seen the yen going down. The question mark for me is this low reacting from a good level on the left side or not, or price does want to go a little bit lower? That's something that I want to be paying attention to. Otherwise, maybe somewhere in here could be a good level to look for longs. Before the news, we did break this high, could be seen a little bit of an engulf up, but I still have concerns about this low. I'm not sure if this low is reacting already from the final move in here, and I could see price going actually a little bit lower. So that could be an option. But yes, we did took the orders from these lows. Reacting from here, there's a potential to continue to go a little bit lower and reach that level. Maybe somewhere in here could be a continuation. Our zone to look for more sales on the yen. Maybe continuation to downside, maybe closer to this level. But nice reaction. Price just took this level. Yes, maybe at this point actually could be a good level to attempt to look for shorts actually, or even a little bit closer to that level before that. Yeah, it's already reacted nicely from that level. Maybe there's a chance to continue to look for more move to the downside on the yen. So yes, otherwise paying attention to this level or even price to create new lows in here. That's basically that for the yen. Canada, it was another one that it was a really strong move down. It was not just in the US that you had really good news for the regarding the unemployment. In Canada, it was much higher. 1,004 new jobs created. Saw the unemployment rate going to 5%. That was a really good number that we have seen in here. 104. I don't even remember last time that you had such a spike occurring in there. It was really good in them. Actually, 2 months ago they had it. So yeah, it was really good news, and you could see how strong Canada dollar CAD moved. Right, it was one of the biggest moves as well, and it continues to go down. Again, another one where you could have seen that it reacted basically from this fresh supply just above this high, another level. So everything, if you actually pay attention to the levels where price was reacting to when approaching just before the news, the NFP, there was a way to predict and to see what will be the direction that you're going to. The approach was really good, and everything was kind of in alignment in that regard. Now it continues to go down. What's next? All this looks almost compressed. There's maybe something in here that price could use around somewhere in there with this line, but I could see when price going all the way back and taking these lows, and maybe after that, maybe reacting from something in there eventually. But yes, maybe something in here. For now, as a small reaction, we have this level in here that price can still use as a continuation to the downside. We have these previous levels as well of support. It can work as resistance. So there are a few barriers even that price can use to push price down, even if we have some kind of retracement to the upside. All right, there's maybe something in here around this level, just above these guys, that price can go there and maybe resume the move down. I wouldn't be surprised actually if that happens. So yeah, maybe a little bit more move to downside until maybe we have until maybe price reaches this level or something close to these lows on the card. And then dollar franc Swiss, it was another one that we were talking about. It looks like it has this range, but dollar franc Swiss was moving quite similar to the dollar index, and it was actually a really good level, another one to look for. Personally expecting new lows in here, reacting from some level in there, but I'm expecting new lows to occur in the dollar franc Swiss to go below this double O. And then maybe we can have some reversal to the upside. Gold was another one that it reacted tremendously well with the FOMC and with the negative numbers with the services PMI. So much that we actually continue to create and break new highs. We just broke this high in here back in June. So we are retesting levels from since May, beginning of May, right? If you remember, our price was moving to the downside last year around this time. You could see that basically price was in a really compression move all the way down. So there weren't that many orders left. We just took the high, and this can be a good level maybe, or I'm actually looking a little bit higher, just a good level for a reaction, because this kind of taking the liquidity now is reacting from straight away the demand zone. So if you keep respecting this level, you can just continue to go higher. Where price reacted to in here, respected this previous level of support resistance. So just a basic break to the upside, retest previous level of resistance, can work as support, and then price just continuing. Now reacting from this level can continue to go higher, or maybe there's a little bit of a barrier somewhere in here as well that can be used. So yes, we did broke this high. There's a chance to go a little bit higher. I wouldn't be surprised if actually eventually gold only stops when it finally reaches around this high at around 1,919 or 1,920. That could be maybe a level in there, and maybe some reaction from here afterwards. So yes, maybe I'm still bullish on gold until we kind of finally reach there. We are having this strong move to the upside, not exactly many lows being broken, maybe a little bit this one, but we are kind of, anytime price goes down, it takes the previous demand and just continues to go higher. This is one that's still fresh as well. Now of course this one in here, something in there, and to look at something in here. So yeah, just keep following gold. It has been one of the strongest as well since the reversal in 23rd, around the end of September as well. Then it retested that level back in November, and it has been moving quite nicely to the opposites, to the upside, while dollar has been actually moving to the downside. Another one to pay attention to was oil, the oil market. Where is oil? Oil, right? So oil has been kind of one of the weakest at the beginning of the year. It recovered. Surprise. Yes, it began the year somewhere in here. It actually lost. If actually take a look into it, or the performance of the assets for the first week of the year, we actually can see that Bitcoin maybe with 4.9% was the strongest. Gold 1.8, really strong move as well. Stocks 1%. dollar actually kind of almost break even, but oil, right? Oil had a really weak last week, beginning of the year, with commodities as well at minus 6.3. Based on what we were looking at, it was not really a surprise. Price was reacting from this level. We talked about it. It was a chance to go down, especially after the break of this low, and something that I covered and we covered during the morning calls last week. It was to target these lows. So pay attention to oil to go below these lows, and after that we can be free to have some kind of reversal. There was no need even for price to target even the demand. Demand was a little bit lower. However, just taking the liquidity from these lows, it would have been enough for price to reverse. Something that occurred as well. We did finally. Then there was two ranges in here, right? There were two ranges to look at. It was the range composed by these highs that it was holding price. It was managing to sustain price to the downside until finally it broke, right? And when it had that breaking, this level of breaking to the upside, this is maybe the confirmation that, okay, ready to go a little bit higher, at least until here, or even the potential to go a little bit higher. What price did afterwards is actually still retested the lows and then move to the upside. Bigger picture on gold, on oil, sorry. Yes, it's kind of approaching this demand zone back in December 2021. So yes, it literally kind of a full year of going up, first kind of semester of the year, and then second semester of a move to the downside on oil, and we are back in here. And so let's see what's next. If you manage to break it, this value is still important. Maybe something here is still important. There's still the chance for price to continue to move down. We are still in this bearish momentum, but they're starting to have a few clues in here, right? To break off this high, a little bit of break of these highs, a little bit of even the break of this one, even though this was just a retest to the supply. So we are starting to show a little bit of a few breaks of highs. However, oil, right? Oil, what is the market looking at oil, right? So there was at this point a mild winter across the northern hemisphere, which is kind of reduced the demand. There's a mixed outlook for China as well, between COVID and maybe the reopening of everything and the economy going back to normal. And of course, right, there is the fear of recession, right? The IMF just warned that a third of the global economy could be in recession in 2023, right? So maybe the supply side, actually the demand side can be decreasing in here. And of course, there's still supply side concerns as well with the European sanctions on the Russian oil. And OPEC is actually reiterated that it's willing to step in with further production cuts, right? So maybe if the demand side is not as strong, there's a chance that the production and the supply is going to be reduced in order to keep price at kind of at these levels in here, at around maybe 70, 80, something like that, without forcing oil to go much further down. And that's basically it in terms of everything that we covered for this week. Again, special attention on the CPI data and the beginning of the earnings season that's going to occur next Friday. Thank you so much, guys. Q&A session going to start now. Let me just stop the recording. Have a good week, everyone that is watching. Thank you. Stop recording.